This satellite company just filed for bankruptcy. It still has satellites in orbit. It still has 622,000 people paying it every single month. And in the exact same 3 months it went bankrupt, its parent company reported a profit of $8.5 billion. Not a loss, a profit. And its stock has been one of the biggest winners on the entire market. The company's Starlink, supposedly destroyed, just became one of the best-performing stocks in America. So today, let me show you how you get rich losing. Start with the company that died. Hughes. You probably know it as HughesNet. For 30 years, it sold internet from space, and it made real money doing it. The model was simple. Park a few enormous satellites 22,000 miles up in what's called geostationary orbit, so high that each one covers a huge slice of the planet and appears to hover over the same spot. From up there, beam internet down to the people cable companies never bothered to reach: farms, mountains, rural roads. For decades, that was a genuine moat. If you lived where the cable didn't, Hughes wasn't your best option. It was your only option. A handful of satellites, hundreds of thousands of subscribers, and almost no competition. Hughes even built one of the most powerful broadband satellites ever launched to feed it. And then, the physics changed, and you cannot outmanage physics. Here's the problem no engineer at Hughes could fix. A signal from those satellites has to travel 22,000 miles up and 22,000 miles back. Every click, every video call makes that round trip. And that delay has a name: latency. It's why old satellite internet always felt a half-second behind. Laggy calls, buffering, stuttering video. Now look at what Starlink did. Instead of a few giant satellites parked way out, it flew thousands of small, cheap ones just a few hundred miles up. Shorter trip, far less lag, faster internet, in the exact same rural places Hughes owned. This was never one company out-hustling another. It was a better orbit beating a worse one, and you can't fix your orbit. Once Starlink existed, Hughes's consumer business was walking dead. Subscribers started leaving, and in a single recent quarter it lost another 59,000. So what do you do when your core business is doomed? This is where the owner did something most people completely missed. The man who owns Hughes is Charlie Ergen, the billionaire behind EchoStar and Dish. And he did not go down swinging. He sold. Not the satellite business, the thing underneath it that was actually valuable: spectrum. Ergen had been hoarding these frequency licenses for years, and there was a clock on them. Federal regulators were pressuring him to use them or lose them. So he cashed out. He sold a block to AT&T for about $23 billion. Then he sold another block to SpaceX, Starlink's own parent, for about $17 billion. Then a little more, for $2.6 billion. Added up, over $40 billion in airwaves. And here's the tell. A huge piece of the SpaceX payment wasn't cash, it was SpaceX stock. $8.5 billion of it. Ergen didn't just sell to the company killing his business, he took equity in it. That stake has reportedly climbed to around $11 billion. And his customers? He's routing his own Boost mobile subscribers onto Starlink's satellite network, instead of spending billions building his own. He didn't fight the winner. He joined it, funded it, and profited from it. Which brings us back to that bankrupt satellite unit, still carrying about $1.5 billion of debt it couldn't pay. Watch what happens when it files. When a subsidiary goes bankrupt, the parent gets to legally remove it and all of its debt from its own books. Accountants call it deconsolidation, and dropping a mountain of debt shows up as a one-time gain. How big? $9.7 billion. That single accounting move is the entire reason EchoStar posted an $8.5 billion profit the same quarter its satellite company collapsed. Strip that gain out, and the real profit was about $49 million, a rounding error next to $8.5 billion. The bankruptcy didn't hurt the parent. On paper, it paid it. Now, is that as clean as it looks? The people owed money don't think so. The court set up a special committee for one job: to review the deals between Hughes and its parent, and the lenders have already pointed at specific ones: more than $1 billion in cash dividends Hughes sent up to the parent back in early 2024, and a satellite lease they argue Hughes was badly overpaying on. In plain terms, were the valuable pieces pulled out of the company before the debt got left behind in it? That question is open, and I'm not going to answer it for you. But here's the fair version, because it matters. Hughes wasn't badly run. It got out-physicsed, and no CEO saves a 22,000-mile orbit from one a few hundred miles up. And selling a dying asset for $40 billion isn't a crime. It might be the smartest thing Ergen ever did. The catch is just this: someone always pays. Here, it's the bondholders staring at that $1.5 billion, and the roughly 400 Hughes employees who lost their jobs. The winners kept the spectrum and the stock. The losers got the wreckage. So, how do you get rich losing? You stop defending the business that's dying. You sell what's actually valuable to the people beating you, take a slice of their upside, move your customers onto their network, and let the debt sink with the shell you leave behind. Starlink didn't just kill a satellite company. It bought the parts worth keeping, while the owner banked billions, handing over the rest. That's the real business model. One more thread: the spectrum, the stock, the deal to beam service straight to phones. It all points at the same prize: internet direct to your handset, from orbit, with no cell towers at all. That's the next land grab, and it's already started. That's the next one.